that was like pretty steady theme for July. There was just a lot of stocks put in their biggest moves really before the market even opens, and then new stocks would make big moves after the market opened. There was some really good catalysts here, and that's what makes the best longs, really, is like, can you define like a really good catalyst, almost like a fundamental reason why somebody or a lot of somebody's would want to be buying this stock. The best way to tell cycles is Twitter or X. Because people are just talking about it, and usually there's a cycle of like, you know, a couple of people start talking about it, then a lot of people start talking about it, and once like everyone's talking about it, you're like, okay, like this isn't gonna work much longer. And then when you get that factor of like it's not breaking down, shorts are kind of twisted, that's kind of the recipe there for like we're gonna potentially see a really big move.
Hey, what's up, everyone? Welcome back to another episode of Trade Takes, presented to you by Investors Underground. I'm your host, Sam, and tonight I am with none other than Matt Monaco, trader, educator, and one of the sharpest minds in small caps. In today's episode, we're breaking down why July 25 was so hot, how he traded tickers like Open and Fig, and the emotional battles that come with letting big winners run. From Reddit-fueled moves to IPO chaos, this one's packed with tactical insights and refreshingly real honesty. Now let's get into it. Please welcome to the show, the one and only Matt Monaco. How are you doing?
Good, man. Yeah, I appreciate you asking me to come on. I'm excited to be here.
I'm so thrilled that you said that you'd come on, and like you're like going back, you're one of the first guys that I found. I don't know if you know the story actually.
Oh, really? I didn't know this.
You're one of the first guys I found, and there was some content that you must have produced. I don't know, might have been one of your first bits of content, and I just remember that was like my starting point into like trading on the US.
Oh, really?
Exploring.
Was it we used to call it Twist? Was it that? With it was me, Jack, and Kyle.
Oh, I love Twist. Twist. It was something with Tim. Something with Tim Sykes.
Okay.
I mean, it's probably going back.
Yeah, I had first thing I ever did in the trading space was a podcast with Bryce Toohey, who was my roommate at the time because I was still in college, and we did a podcast called Beyond the PDT, and this would have been probably 2019. And we just interviewed, like I had, at that point, I still like wasn't making money trading. And the thought behind it was, I need to figure out a way to like get my foot in the door and talk to some of these good traders. Cause maybe I'm going to learn something. And then obviously like, they're not going to talk to nobody. So I figured let's make a podcast and try to get some people on. We'll just share what we learned. And yeah, that was really cool. Cause it's still on YouTube, by the way. There's no video. It was supposed to be just a podcast, but the audio clips are there. But like we interviewed Jack Kellogg, and I think Jack Kellogg at the time was around like $200,000 or $300,000 in profits, right? So he was still like in the early stages, and obviously now he's just shattered that out of the water.
Now he's a monster. Yeah.
Now he's a monster. Yeah, exactly. But it's cool to see those exact traders just like in their early stages of the journey.
That brings back so many memories because now you said Twist. Now I remember, and I remember you also had Dom on in the early stages as well, and I'm pretty sure it was this. And he was talking about the intradaily.
Yeah, I still use that term, intradaily.
Yes, I mean I don't know if he coined it. I guess he did.
He was the first person I ever heard say it, so I always give him credit. But yeah, it's a great term.
I think he absolutely deserves it. And I remember, honestly, you just brought so many memories back because I remember you talking about how you like that was your avenue to your development as well. Was actually okay. How am I going to speak? And I feel like that as well. Like in terms of the greatest honor of this is I get to chat to the likes of you and lots of others, and it's like
it's funny just the roles being reversed too. But like I still listen to a lot of these podcasts too because. I've had some success as a trader, but there's levels to this game. We talked about Jack, and there's a lot of traders out there. So especially when any of those guys come on, like, yeah, you got my attention.
Yeah, and I feel the same. And I always feel like there's something you can learn from everyone. And sometimes it might be an hour episode, and there's one thing you'll come away with. And like when I go through the guests that I've had on, like Jeff Holden from SMB. He just spoke about like he just said ask yourself a question whilst in the trade. Are market participants behaving in the way I expect? And I'm like, bang, love that. And like,
Yep.
that's the one thing I go, I mean, there's a great conversation, but I just take that away. And I'm like, it's just, so I mean, absolutely. And I mean, it's funny. It's funny talking about Jack in like a 300K point of view as well.
Right. Yeah. No,
'Cause,
that's just an average trade for him. So
I was going to say that's just a rounding error or a bad
Yeah.
Monday now. So tonight I'm really keen to, I mean, I want to drill down. I know you mainly focus on small caps, not exclusively, but I mean, we got to talk about, I think we've had, well, July in particular, I think was a really hot small cap month.
yeah.
And what are you seeing right now in terms of what's happening with small caps? Is it hot? Would you agree?
Yeah. Like you said, July was a great month. I was actually just like kind of looking at previous years and previous stats. And funny enough, like it seems like most Julys, I have like really good Julys, which I wouldn't have said because usually, you're in your summer mindset. But yeah, June, July usually are pretty good months. And then usually it's August and September where things for me personally slow down. It doesn't mean there's not trades, obviously. It's just,
Yeah.
and it's always dependent on the year, but either August or September, one of those months is usually a slow month for me. It definitely feels like it slowed down a little bit so far this month in August, but there's still trades out there. There's definitely at least one, maybe two good trades that I see every day. It's just not like July, where some days in July it was like 5, 10. It was just madness.
Yeah, and I definitely want to come on to that a little bit more, a little bit later, because I think that's a really powerful point as well in terms of, and it links nicely to cycles. And in terms of like judging that cycle on an ongoing basis, obviously touching on July being hotter than August, is that something you're acutely you're very aware of and judging on like a day-to-day basis?
I keep it in the back of my mind. I don't know if it changes my approach. I kind of go in every day, like fresh start, thinking like, I've got my plans. If trades come up, we'll make some plans on them. But on like a longer term frame, like week over week, I do try to keep tabs on like just like what's hot, right? Like because usually in the market, what's working really well, it'll keep working well for at least a couple of weeks before then it goes out of style and slows down. So like in July, for example, pre-market was like there's just a lot of pre-market runners, a lot of news was coming out pre-market. And that was like pretty steady theme for July. There was just a lot of stocks put in their biggest moves really before the market even opens. And then new stocks would make big moves after the market opened. So far in August, definitely there's just been less of those pre-market runners. There's just kind of like less news coming out. And you can equate that to anything. Like it's summer, school is about to start, people are on vacation, their last vacation before school starts, right? Which is probably logically it. Like if there's less people in there watching the market, there's just going to be less trades.
Yeah.
So that's definitely what I do. Some of my strategies, like I like trying to catch what a lot of people call like first green day bounces and stuff. And for me, like, especially over the last like 2-3 months, like I just haven't traded them well. And so that's one of the strategies that I just do less because today, IXHL actually had a really strong bounce after, several days of pullback, and I just didn't even trade it. I missed it. But that's my approach to the cycles there. I actually, just building on that, sorry. But
Yeah, okay.
I tend to find like the best way to tell cycles is Twitter or X.
Yeah.
Because people are just talking about it. And usually there's a cycle of like, a couple of people start talking about it, then a lot of people start talking about it. And once like everyone's talking about it, you're like, okay, like this isn't gonna work much longer.
Yeah, it's always when you're like your grand or someone asks you about something, you're like, oh, maybe we're at the top of this cycle. But I mean,
Right.
speaking of like cycles and sectors, though, like one thing I think is one of the reasons why July was so hot was we had a lot of PRs that were quite similar.
Yeah.
I don't know if that's a theme that you focused in on, but just in general, any like crypto treasury, anything of that description, it seemed all of the crappiest companies seemed to all of a sudden be doing that. I mean, but that made it hot, right?
It made it hot. Well, yeah. So the first couple that obviously did it were fairly legit, or I guess more legit.
Yeah.
So they went on huge runs. You had, your SBET, BMNR, and they went on massive runs. And then sure enough, all these super crappy companies then saw it. So towards the end of July, anytime a crypto PR came out, it was just pretty much like a quick pop, and then you'd round trip within like 5 minutes.
Yeah, I mean that again. That like I do think about that in terms of cycle, in terms of like eventually it just does get tiresome as you get towards the end.
Yeah,
Everyone all of a sudden is like, yeah, I don't believe you anymore.
right. I mean, in trading in general too, like when everyone's on the same side, it's not going to work.
Yeah.
Like when there's too many people that all think the same thing, the odds of it working drastically decrease. And I think that's what happened. Like we just saw so many of those crypto treasury PRs that then everyone knew like, oh, like as soon as you see crypto treasury PR, just buy it. And well, that obviously didn't end up working very well in the long term.
Yeah, and I think we tend to then shift to like this. I don't know if scammy is the right word to use, but like in terms of like just companies who don't have any cash. So it's like actually it's probably gonna be quite difficult for you to buy anything when you can barely keep the power on, right? It's like we get to that point and we're like, yeah, I'm not sure about this.
There's a couple, I think KWM or KWE, one of those tickers, like, you know, there was a couple like $1 or $2 million market caps that were like, we're buying $1 billion of Bitcoin. They're like,
yeah,
okay,
yeah,
sure you are.
they're on the balance sheet. It's like, yeah, I bet you are. In terms of what, you know, the other themes that emerged perhaps from July, I mean, I think that is number one. I don't know if does anything else stick out for you?
The other one, WallStreetBets definitely made a pretty good comeback.
Course, yeah.
And that led to Open and GoPro, KSS. And it was pretty quick. Like it was only like a 2 or 3 day thing, but that definitely produced some really good trades. And then I think also, it's not really a new theme, but like certain IPOs have been really, really hot. Like we had, I can't remember, it was a couple months ago, CRWV. Then we had Circle, which was pretty nuts. And then Fig IPO'd, I believe it was the end of July, like the last day or two of July. And that was just another hot IPO that definitely presented some really good trades.
Yeah, and there's another one today. Is it what WYFI? I think it was Wi-Fi.
Oh, was it? I didn't even look at that one. I was off desk.
Yeah, so that one.
I know David laptop.
I mean, I think it round tripped actually, but you know, I mean, it opened like a good $8 higher than the IPO price.
Okay.
And then round trip. But again, I guess that's just like what we're talking about in terms of those cycles. So in terms of like you've touched on, I mean, there's so many like great names that really stand out there. I mean, it's probably let's drill into Open and Fig. I know they're two of your.
Yeah. I'll start with Open. Let me share my screen here. Open was my best ticker of the month. I had multiple trades on Open. And then Fig, we'll talk about next. Fig, I had my single like biggest trade, but Open was just a series of a bunch of trades. And, you know, for me, it kind of started here, like around the 10th, 11th, 12th. I kept seeing, you know, I peruse Reddit, I peruse Twitter, because I'm always just trying to get a vibe of what's going on out there. And WallStreetBets is one of the Twitter subreddits that I follow. And they're just out of nowhere seem to be a lot of people starting to post about Open. And they do that all the time. But then all of a sudden, once you see like these people where I have no idea where they get all their money from, where they're like, I bought $1 million worth of Open. I have $500,000 worth of Open. And I'm looking at this chart and on like the 10th, 11th, it's like not moving. It's sure gone up a little bit. I'm like, what are you guys doing here?
Yeah.
And then it started to take off. And honestly, I didn't even place my first trade on it until the 18th. Or maybe I had a small trade on it the 17th. And then the 18th is when I started trading it. Because if we zoom in and we look at that chart a little bit more, probably go to a month view. Let's see here. We'll load it up. But like that's when it really started getting volatile, right? So back here on the 10th, 11th, 12th, it was just kind of really, really grindy. And it really started to pick up volume on the 16th. So my first trade on it was actually on the 17th. I, at the time, was just like, this is just like silly. This is just some WallStreetBets thing. So I got some shares short into the pre-market and it flushed down because I kind of thought on that day that was like our exhaustion gap. You know, zooming out with the information we had at the time, you know, it'd gone from 50 cents to $2.
Yeah.
That's was a massive move. So at the time, it definitely looked like it was like a big exhaustion gap. And I thought, you know, WallStreetBets is going to start taking all their all their shares off here, and we're just going to collapse because typically WallStreetBets is not very good at picking stocks. And then that was a Thursday, and then on Friday, it got my attention. I didn't trade it all in the morning session, but into this grind up here in the afternoon, it really started to get my attention. That was roughly where VWAP was at the time. I think VWAP was around like $2. And just in the back of my head, I was like, this is just holding far better than it should. Maybe WallStreetBets is onto something. And also the fact that it was a Friday and it had this WallStreetBets hype around it, the thought process and thesis was, maybe over the weekend, this is going to start to go viral on WallStreetBets because there's just so many people talking about it on a Friday. That's going to kick in our FOMO. And, at that point, we might get a really, really crazy move there. So I actually ended up buying some shares, I think right here around like 205 or so. And I was like, I really should hold it over the weekend. And just the way it traded kind of sketched me out because, again, it was just like, you see all these candles. They're just green candle, green candle, green candle. And I was like, oh, man, like, I just feel like this is going to slam on me into the close. So I actually sold most of my position there, which hindsight was quite a large mistake because then the next day is when, the thesis played out and it did go crazy. Went all the way up to $5, which was awesome. And for me, my mistake was I just switched biases on this. And I had really good overall P&L on it, but my P&L could have been multiple times better if I just kind of trusted my gut and went with all this crazy hype that was going on and let that trade run. So I missed, I tried shorting it here and I ended up cutting basically when it broke high day again. And totally was like, all right, this ticker is just too strong. I'm just going to move on with my life. And then I think Kyle Williams put it on my radar and was like, dude, this thing's halted down. And I was like, what do you mean? Yeah, sure enough, like into the close here, just slam halt down. So I missed that big halt down move. But then we popped back up to $4 and I did short some a little bit there and again, covered in the close. And then the really big trade for me was actually the next day, which you might hear some traders call like first red day or whatever. But for me, the thought was, clearly it had gone viral on WallStreetBets. On that day, everyone was posting about it. You were seeing people being like, I finally got in, and their average is like 480. And you're like, oh, congratulations.
Yeah, right.
So like it was very, very obvious at that point that there was a lot of bag holders. So it could have always ran, but my guideline on this, and I had a couple trades actually this month that were similar where, history repeats. Shot, I believe it was in November. November 2024, this day, where it had a very, very similar run. And on November 2023, we had this huge move, and then same thing, just slammed hard into close. And then the next day it gapped up, and we had basically this $6 line where it was basically the same as our $4 line here, where we topped out on open, and then shot, you can see obviously had a really, really bloody red day. So that was my thesis going into it. So sized in pretty heavily out of the open. And then even into this pop, which if you were trading that day, that pop was pretty scary because it actually halted up on that pop.
Honestly, there's trauma there because that was it had such like obviously out of the open it was just straight down. And then I was like, okay, we're free, all pops are good, and I already had a position. All of a sudden it just went, oh, hang on.
When it halted up, there was definitely a moment where I was like, oh, we might be in some trouble here. But, the risk was pretty much still just that $4 level. And, obviously it ended up working where we just ended up fading off. And then from there, I covered most of it towards the close there. And then for me, I pretty much just let it do its thing. I think until, I think it was this day. Yeah. Where at that point, I was looking to see, basically a multi-day breakdown and just see if we can get some follow through to the downside because clearly people were still bagged at that point. I believe it was the 29th or maybe it was the 28th. I'll have to go back and look. I think it was the 28th. They were supposed to do a reverse split. That also led to some of this thesis. They had a meeting to vote on a reverse split and they ended up delaying that meeting a day. And, I didn't trade it, but that was kind of WallStreetBets thesis. Like, hey, if we don't get a reverse split, this thing's going to go to like $82 a share or whatever they were saying. So the fact that on that day, even though they decided to delay the vote on the reverse split, we still faded. It was pretty obvious that the stock was super weak. So again, the next day I got some shares and just took some more of that downside there. And then from there, I just let the stock do its thing. But multiple opportunities along the way. And that was a really good one. And yeah, I guess I'll jump over to Fig. Unless
I mean, they're open, definitely. I mean, that first red day, as you described it, I had shot in mind as well, but I also had CEI.
Yeah, that was another good one.
Years ago. I mean, that was quite a few years ago, but I just remember that one like pretty much the same in terms of like the afternoon, it just absolutely collapsed, and then a real nice pop, like it's somewhere into that like range of the previous day, and before it then just absolutely collapsed. I mean, that day was my biggest trade of the month.
Yeah, beautiful.
But, I mean, it's just one of those. I think it's one of those setups. I don't know about you, but I have to temper my excitement because I'm like, I know this is pretty good, but whatever you do, don't take tons of cuts or don't get too excited. Just wait for the setup. Still is going to come.
No, I agree. I'm actually glad you brought that up, because that was kind of a problem that I feel like I was struggling with a lot last year. And every now and then it'll creep in this year too, where, these A+ trades, like you see them coming. And yes, a lot of people do know that they exist. And then I just get too aggressive too quick. And therefore, I end up having a bad average or too much size. And even though the trade works, I pretty much just shake myself out because I'm thinking like, oh, this could be a record trade. And if I get those thoughts in my head, I'll just mess it up. Like, I'm just a human, I'm just going to make that mistake. So I have to go in and definitely, like you said, like kind of try to tone back those emotions. And it's just a normal day. Yes, we got a slightly better opportunity than usual, but don't go over there and click your hotkey 100 times. Like, let the trade set up, let it bounce. Give yourself a breather.
But I think that's a powerful point as well, because one of the issues, I think, not the issues, but one of the key aspects, I think, of reviewing a trade like open when it's such a good opportunity is it does feel like there's an element of pressure that it doesn't, maybe not a record trade, but it has to be significant in terms of your monthly P&L, because like it's just one of those trades that can, I mean, this is the difference between a good month and an okay month, or an okay month and a bad month, right? Like these opportunities stand out that much. I mean, it's interesting that you mentioned in it as well that, obviously we're human, and there's a human element to temper that and to try and, like you said, just try and be neutral as possible in the moment.
Yeah. Honestly, that's my biggest ongoing battle as a trader. Like at this point, I've been doing, trading for like 7 years, successfully for about 5. And like, I know I can trade. I know like I have good ideas, good theses. I just get in my own way. And so it's kind of just battling those emotions, because, anytime I feel like, even like in a slow market, right, my mindset will be like, oh, let's go find a trade. Right. And as soon as I'm like hunting or trying to find a trade, like I'm just going to make some boredom trade. I'm going to make a mistake and just like throw some money away. And like, don't do that. It's simple things to say out loud, but it's just like natural human emotion. That's my definitely biggest hurdle still.
I think that's one of the hardest things to do, is like we effectively, like, we turn our PCs or whatever into something that makes money. And I think there's something very difficult about sitting there and not doing a lot.
Right.
I still think that's one of the hard. I think inaction is incredibly hard.
Yeah. Well, I can even say too, like on most of my trades from July, like when I was reviewing, like the thesis I came to was, if I did less, I would have just made more money. Like if I, there's no reason to sell and take off this position, right? But I did it anyways. If I just would have just like let it work, like I would have made more money. So yeah, the sitting on your hands is tough, especially when, for whatever reason last month, I definitely kind of cut my winners short. It wasn't, cut losses were fine, but the winners, like I definitely tended to minimize them. And, from a human standpoint, right, if you ever sneak a look at your P&L and you're like, there's $5,000, $10,000 in there, and you're like, oh, I could take this now. This would be great.
Yeah.
But you can't be thinking that. You can't be trading for the money, and that's one of the things I do, and I know a lot of traders do too, is like I don't even have my unrealized P&L showing.
Yeah.
Because I just know myself. If I look at it and I see that there's a large number there, it's going to affect my decision making, and I'm probably going to make the wrong decision.
Yeah, to be honest, I know I've heard so many like of the best traders say that, and it's still one of my flaws that I'll look it up. And it is frustrating. It frustrates me at least as well. And I think like on that point, like I still think like for me anyway, like cutting losers, I don't find difficult. Really, like for me anyway, like if I think I'm going to find it difficult, I put a hard stop in, and then I'm like, right, I'm done.
Right.
But like you said, it's letting those winners work, and I think like sometimes it's so easy to talk yourself out of it. And like open, for example, my goal typically, like, and I say this all the time, I'm like, got to swing this. Just swing this till tomorrow morning. Swing it. You're going to get another 10% gap down or whatever it is. And I'm also there. I've obviously usually got like the most size I've had, and like I know my P&L is looking pretty healthy.
Right.
And I get to the end of the day, and I'm like covered. And I'm like,
I get
every
it.
damn time, I'm like, God's sake.
I get it.
It's just so easy to do. That's for sure. I mean, that's such a great opportunity. It's funny actually. Like I know you. I know like you. You're great in terms of like the finding opportunities on both like on the long side and the short side. It's just funny because I'm pretty sure like back in the day you were kind of like mainly on the long side, and I bet now you must look at it and think it's pretty cool that you, like obviously like for you anyway, like when my biggest trades are along, for example, I'm like, oh, look at me kind of thing. I don't know, you're probably too far past that point now, but it's still pretty cool like with something like open to that's your best trade for the month.
No, it is cool. Well, I kind of just came to the conclusion a couple of years ago, because I was, as you said, mostly long biased, and pretty much just came to the conclusion in the small cap world, like, yes, there's going to be big runners, but also like 95% of these times the stocks are just going to come back. And it's almost easier to find short-based trades because they're just staring at you in the face. They're like, hey, this stock just ran up 500%. And you're like, okay, I know there's a very high odds at least it's going to have to pull back. Versus the long, you almost have to almost work harder to like build a really good thesis of like, there's actually a reason, yes, this crappy small cap stock should run.
That being said, you were all over that reason. Like you touched on, like you're talking around like very early in this cycle in terms of WallStreetBets being on it. And that was way before
it's in my blood.
It started getting pumped on CNBC and everything then after that.
Yeah. I think it's how I learned to trade. It was like the first thing I learned. And, from there, it's kind of just the foundation. And I think kind of like one of the main long theses out there is like, hey, when are shorts screwed, right? Because that tends to lead to the big short squeezes and the big moves, which on the flip side has now helped me a lot on the short selling side too. Because if I'm in it and I'm like, oh snap, like I'm screwed or shorts are about to be screwed, I'm still not perfect, of course, but like I can recognize it at least fairly quickly and just bail out of that trade. Because typically on the short side too, like if you're trying to short front side and you're trying to get a good average on the way up, like if you're wrong, just be wrong, because then you're just going to try again higher, and it's probably just gonna be a better trade later. Which is something that is unique to short selling versus on the long side. Most of the time, like on the long side, it's either just going to work when I'm trying to enter, it's either just going to go or it's not. And if it's not, then I'm just going to cut that loss and be done with it.
Yeah. And I think that's a really interesting point. And in terms of like, I mean, this applies to both, but do you have like a typical, I mean, not just, you don't have to describe anything, but like in terms of, do you have a typical entry signal where I'm like, this has been consolidated here, when it breaks here, I'm interested? Is that kind of how you approach those longs? Because like you touched on there, it's very easy to like start spotting Wall Street. It's not easy actually at all. It's very difficult in my opinion. Like
I'm just addicted to.
you're an addict. Like you were on the case, but it's one thing. Like, but to turn that trade idea actually into a trade, it's not always easy. And like you said, for like the first couple of days, it was grinding. There wasn't any particular volume. It looked like, I don't know, it just didn't have that look about it. Then all of a sudden, like you said, there's that something in it. Is that like down to intuition all the time, or do you have something where it goes like, this is holding VWAP into the afternoon, bang, that's my entry signal?
I forget who you quoted earlier, but you said basically like when the market is not acting as it should.
Yeah.
Who was that?
Jeff Holden from SMB.
Okay, yeah. And I completely agree with that too, because that was pretty much the entire thesis of my first long trade there on open. Just let me zoom back into that day. Right. Yeah, it was this day. You know, again, I talked about how we ran up from 50 cents to $2. Massive move. It faded. And the way these typically play out, or should, if you will, play out is, you know, the next day might fade. Maybe there's a little pop, but it probably should have just been like floating around these lows, at least around like 160, right? Like that was what I would say is like normal action. And instead, out of the gate, we got this massive rip. So, you know, that you even at that point, you could be like, hey, maybe it's just squeezing out like early shorts or over aggressive shorts. But then we pulled all the way back. And again, VWAP was roughly around 2. And we just started grinding. And once we got over VWAP and it was around like 2 o'clock or so in the afternoon, like there was just these warning bells in my brain basically saying like, this is not doing what it should be doing. Like, it definitely should have died at this point. And not only could you then say, well, shorts are definitely twisted, which I'm sure they were, we also had that added layer of the WallStreetBets. So I knew that there was just this big pool of, you know, dumb money, if you will, who was going to come in and probably buy this stock. It was a Friday afternoon. Typically on Friday afternoons, like if we get these potentially viral stories, you know, those are what lead to some of the biggest gap ups come Monday, because Saturday, Sunday, the market was closed. There's just a lot of FOMO building and we get these big gap ups. You know, kind of along the same lines, BMNR, it was one of my better trades of the month on this day, the day before the 4th of July too. And I know Short Bear actually posted about it on Twitter. He had a little bit better of a trade than I did, but he's the Short Bear for a reason.
One of their monsters.
But you know, another kind of just like inefficiency where like the market on this day was a half day. I closed, I believe, at 1 p.m. And you know, this chart, it still like same exact kind of thesis. Like it was into the end of the week, low float. There was some really good catalysts here, and that's what makes the best longs. Really, is like, can you define like a really good catalyst, almost like a fundamental reason why somebody or a lot of somebody's would want to be buying this stock? And then when you get that factor of like, it's not breaking down, shorts are kind of twisted. That's kind of the recipe there for like, we're going to potentially see a really big move. This also had, you know, that inefficiency of a half day. And I ended up buying a bunch of shares around 50. And I think I only made it to like 80. And obviously it went to 160, which is just an absolutely massive move. But almost the same exact kind of thesis with just a couple different elements in play there.
Yeah, and that's another great example of something. And I always think as well, like, and this is where like perhaps I need to challenge myself more in terms of like this, for example. Like I was like, this is not a short all day. Shorts are bent because we just basically held that 60-ish, like high 50s, 60 level all day before the prior day to this. And then like we had that, I think we had like a gap up, didn't we? Or something.
Yeah, I think it was a small little gap up.
Yeah, and I was just like this, and it was, and I mean, like you said, it had so much going in its favor in terms of like that's the story that was like, you know, strongly resonated with a lot of people. And yeah, we got the 4th of July fireworks. That's for sure.
Definitely.
That's a great example. And I know we're desperate to chat about Fig as well. I mean, Fig, I think Nate has just
I saw him post about it. Yeah, right there too.
Like,
and he swung it, which I don't personally ever hold positions overnight, and it's something I know I should do. I know I should, but like you said, it's kind of the end of the day. you're faced with that like human decision of like, hey, I've already got this profit. Like I kind of just want to like close up shop, have no stress, which is fine. But like there's, as we said, there's kind of levels to this game. If you want to go to the next level, some of the things you got to start doing is accepting that risk. Most of the time they fade for multiple days or even breakouts. Like they might gap up and continue running for multiple days. But yeah, Nate, long story short, had a great trade on it.
Well, I think like going back to that, I think as well, like on that, I think sometimes there's like that mental scarring from like I don't know what the percentage would be, but like the 1 out of 10 that then like fades all day and then gaps up the next day. And then all of a sudden you're like, wow, I'm back at my average. And that scarring is so strong from it. You're like,
right,
I'm just going to lock in. But like clearly with this one, Fig is like such a great example of, I mean, it's pretty much a 50% haircut.
It's huge. Yeah, and there's some good posts. I don't know if it was Nate or Lance talking about it, but like there's just a lot of hype again around this stock, Figma, fairly large company. IPO is coming out. Everyone in basically every chat room I'm in was talking about it that day. Everyone was waiting. It was delayed open for several hours. So like, again, there's a lot of emotions, a lot of excitement there. A lot of people were comparing it to Circle and CRWV, which went on these huge, multiple week runs. So I was definitely just fairly long biased going into it. Fig also is just popular, again, kind of on WallStreetBets or on Twitter, even people I don't know, like when they start talking about it, right? For a long, that's kind of what I'm looking for. I want it on people's radar. I don't necessarily want to be the first person buying, but I don't want to be the last person buying, right? So Fig here. I'm not typically familiar with trading IPOs. So, this entire first move, I didn't even touch, which was massive. I mean, it went up $20 a share, basically straight up. My trade came into the afternoon where, because it opened so late, again, I think it was either Lance or Nate talking about it. Like they were saying like, emotions are really high. Like people didn't really have all day to make a decision on this. And because it was just a really short market cycle, which again is kind of an inefficiency. And Lance his magnum opus, I've watched a lot of videos in that course of his, and he talks about IPOs. Like I think he says like for the last 15 years, like if an IPO closes strong at the end of the day, like there's really strong case edge that it's just going to continue the next day. So that was in the back of my mind there. So I ended up buying, I think my first shares I bought roughly around, must have been over here. Yeah, over here. I'm not really a trend line trader, but there was pretty much a trend here. And that was like our first attempt at having a uptrend there of breaking to a higher high. So I bought some shares, and then I think I added somewhere around here. And again, the goal going into this was I'm going to hold this thing overnight.
I know how this story ends already.
I didn't. I ended up selling most of them. I had some pretty good sales for the day, but sold most between 119 and like 122, which even on 1,000 shares, right? That's $20 a share. Like that's quite a massive move there. And then sure enough, we can see history here. It went up to 150 after hours, which is just insane. And then at this point, I also traded the next day, but I did flip biases because it felt like, again, I guess you maybe try to explain it as a pendulum. Like we swung kind of too far, where everyone, their mother, their grandmother was like, this is the next Circle. This is the next CRWV. And, that's just when the warning bells start ringing, where if too many people are saying the same thing, the odds of it happening just drastically decrease. So after that big gap up, I was kind of thinking, all right, like, I think I might have even traded live that day on StockTrade's YouTube, where I was like, there's a chance this thing goes like sub $100 today. Like, cause I think it's just overhyped. And yeah, sure enough, pretty much out of the gate, I just stabbed it, risking more or less the highs there. So I didn't have very big size, and we just went straight down. And then we bounced, and I caught a little bit of this rollover too. But, at that point, the swing trade to the downside was massive. And yeah, basically a 50% haircut. And I actually caught on this bounce day too, because similar kind of thesis. Like, I mean, it was a 50% haircut on one of the hottest IPOs we've had in several weeks. it's not just going to go straight down. There's going to be a bounce day. It's just a matter of when. You don't want to be too early. So I was kind of looking at this 84 level. So I was kind of watching it on this day, and we just never really got there. And then I'm not going to try to buy a dip at the end of the day. That's usually a recipe for disaster. So the next day, what ended up happening was, we've got this after hours low here, basically 76.60. And out of the gate, almost immediately, I think it was, the third minute, we went in, tried to test it. And, my thought at that point was, oh no, like it's going to keep going down. But then it didn't. And it's kind of one of those scenarios, like, we just tested lows. It really did look like we were going to break lows. We instantly swiped back. So I ended up buying some shares. I think red green on that day was 79, if I remember correctly. So we went right up to red green. And then when we broke through red green here, that was really where I got the bulk of my position. And we, went on $5, $6, almost $7, $8 share upside in the morning, which is just, that was the bounce I was looking for. I knew there was a high odds of a bounce on that day because big picture, or, at the beginning, we talk about intradaily. Great example of intradaily here. It's not the first day the stock's trading. You got to take into account history. Yeah. But a lot of people just go to the daily chart. Like, there's only so much information you get out of the daily chart. You got to really kind of zoom in, look at a 10-day chart, a 15, 20-day chart, and see how it really traded during that day. So yeah. And then obviously it kept bouncing. Has pulled back. At this point, it looks like it wants to go lower, which is crazy. But Fig was another really good trade for me there.
Yeah, such a great example, and such a great example of how, you've got the trifecta there as well in terms of its framework. You've got short long, which I always, I think that's incredible, and I think as well, like, it just really demonstrates, like, going back to like what you said about like doing less is more. Like, this is such a good example of that in terms of like focusing on a name that has ridiculous range, has like obviously a lot of volume. Like, how much opportunity is just there,
right?
Like, you've nailed it.
Yeah, I mean, you hear traders say this all the time. I know this, but still, like, it's kind of just a hard stat to accept. Where if you take open and Fig, like, that was probably 90% of my P&L for July, just on those two tickers, right? And then I probably had another 100 trades on top of that where they just didn't really do much.
Yeah, could have been on the beach or something somewhere.
Right, could have been on the beach. And it's the same with a lot of successful traders that you hear. But I almost think, though, too, the other side of that coin is if you're not kind of in the trenches, at least day to day, like, you might see a big picture trade coming, but you're not going to have the same level. You're not as in tune with the market as someone who, I'm not saying you got to sit in front of your computer all day, every day, but at least showing up every day to be able to see like what is happening. And because when I'm in that flow state, right, when I, you kind of know what the market's been doing for a while, that's usually when I'm trading my best. When I just come in like cold turkey, I haven't seen a chart for 4 days. I'm probably going to mess something up.
Yeah, and I also think as well, like, to touch on like open, for example, like when we were describing that first red day, I was also trading it the day before as well. And I think like I made more money on the first red day, but the fact that I traded the day before really helped in terms of knowing the levels, knowing levels, and just like having like, I don't know, like just like a loose feel. And it's not something that I could describe, but it's just like
just like I guess we could call like the personality of the stock. Like, Open was a very, very thick stock compared to most small caps we trade because the float was huge.
Yeah,
but you got a good feel for it. The day before too, like there were multiple times on the way up, like, say I don't remember the levels, but say it was like $2. You establish a level of $2, it'd go to 198 and then swipe back up. And it did that like 3 or 4 times the day before. So you kind of know that going in, and yeah, you could maybe try to piece that together by looking back at the chart, but like in the moment, you really feel it and you can see it. You experienced it, like you felt the snapback.
It's just it's definitely not the same. And I also think like it's like when you like I like draw like Nate will always say like draw key levels on your chart, and I'll draw key levels, but it's so much easier when I'm like, oh, I I draw that, and I can remember why, because I traded it a few days ago, and that makes that trade, the next day a little bit easier. I always find anyway, and I think, like you said, it's probably, that probably does need a bit of reframing on my part, at least, in terms of like you said, whilst the bulk may come from a few trades, at the same time, it's making sure that you're like on form and in that flow state. So I think that's a great point as well. Keen to pick your brain for a couple of things. I mean, we've gone over so much there in terms of just base look at your like strategies as well, and just talking. I mean, small caps in general, and I think that's so much fun. And I think when you get something like open, like we've touched on, it's really about like just tempering that excitement.
Yeah.
Well, what I'm keen to sort of pick your brain on is, like you said, just 7 years, 5 years, extremely successfully. I mean, you started at a very different time to now. But that being said, what general advice would you have for someone who's sort of newer to the game and perhaps in their first few months of trading?
Yeah, probably not going to be popular advice here, but you hear adjust expectations all the time, and I really do think that is what helped me succeed more than anything. Because obviously, I came into trading like everyone does. You want to make money, but my plan was kind of like, if I can figure this out in 5 years, right, then the rest of my life, the next 60 years, is going to be awesome, right? So like 5 years of like, and obviously it didn't take me a full 5 years, but having that mindset off the bat, like it allowed me not to get frustrated. If I had some losses along the way, that is what I would always remind myself of. Hey, like you're only a year into this still. Like you kind of wanted to be like, look, in 5 years, I'm going to figure this out. So along those lines, the typical advice is like trade smaller. You don't want to blow up and lose all your money. And, the fact is like, there's always this FOMO of like, oh, the market's not going to be as good as it was. But my belief is like, yeah, 2020, 2021 were crazy. And there's some crazy things that happened. But honestly, 2024, so far 2025, like, I don't know if I have the data to say it's as crazy, but there's a lot of trades. Like there's really no shortage of opportunity out there. So I don't think it's going to go anywhere. I think in the time that I've been a trader, trading has really like shifted a lot in the eyes of the public. I think in 2018 or so, when I got started, like it was like a weird taboo thing. Like you're trading. Oh, so you're just kind of like gambling money a little bit. Like there's no way that's a career. Where then I think 2020, 2021, like opened a lot of people's eyes to like, no, this is real. And therefore, I think there's a lot more market participants. I think that's also what's leading to just feels like a never ending stream of trades.
Yeah. And I think on that, it's something that very different in the US and the UK. I think we're still a few years behind the US, but like, I just remember like, it's just everywhere. Like CNBC, it's just everywhere. I was in Cheesecake Factory and and on TV, they're chatting.
Right.
They're chatting companies, stocks and everything. And I'm like, that's quite, that's pretty mainstream at this point. But you don't get that in the UK at least anyway. So, I mean, there's interest in talking about that shift. But like something that, I mean, just to add on that as well, because you did such a great job of networking. Do you think, I mean, I'm sure that can be replicated now and it's probably no different. What like advice would you give someone? Like, is it as simple as try and start your own podcast or whatever it is? Like, is there more to it than that, do you think?
Yeah, I mean, starting your own podcast is probably not the worst idea. Obviously, it's been done a couple times at this point. But I think like if you're trying, like it's not a bad place to be. I think there's also like the shift. Maybe I'm just more open-eyed to it, but it feels like there's a lot more trading meetups that are happening now, whether they're sponsored by Traders for Cause. I know brokers host a lot of meetups out there. So like go to those things. Right? Like it can be scary, but you got to go to those things, especially if you're trying to get your foot in the door, because you don't know who you're going to run into or what relationship you're going to make that changes everything. Because like you said, networking, I do believe completely like maybe I would have been successful without it, but definitely not as quick. I don't think probably as successful. Like if it wasn't for the people I met along the way who not only taught me things, but then, challenge you to do more things or inspire you because they're putting a big P&L. Networking is absolutely critical.
And I think they also make it fun as well. Like it's like mentioned trades for cause. Like I would encourage every single person, like in your first year of trading, like go to a meetup of some description. Meet up with someone, obviously, like meet up with a group or do something. And I think that makes it feel that little bit more real as well. And I think like the funniest thing, like when I first went to Traders for Call, it's funny, like you said, you're brushing shoulders with Jack, Lucas, etc. And everyone's just actually really normal.
Yeah,
Like,
that was one of my first thoughts too.
there's literally dudes here who are worth literally tens of millions more.
Yeah.
Just normal, completely normal guys having a drink and having a laugh.
Yeah. It's a weird mindset shift because obviously you see them, whether it's, on a podcast or YouTube or Twitter or whatever. And then you meet them in person, you're like, oh, like you are just kind of normal. Like,
yeah. Yeah. Very normal, actually.
Yeah.
Like more than anything. And there's something I think that, you definitely threw yourself in at the deep end. And in terms of, like you said, podcasts, etc., you're networking. You were like very vocal and public about what you did, but you've obviously done a great job to avoid burnout. And at the same time, you've kept leveling up, like, continuously. What do you think has been sort of a baseline secret to that?
Yeah. Honestly, I've taken good chunks of time off trading. Looking back, it's going to look like my timing was really good, but 2020, 2021, I made a lot of money really, really quickly. And one of my biggest fears on the way up was like, I don't want to be that trader that makes all of it and then loses all of it. And you've seen the horror stories.
Yeah.
So kind of about halfway through 2021, I like took a step back and was like, all right, let's just like give it a little time here. Like, cause when you're in it and like trades are just happening, it feels surreal. It doesn't even feel like it's real. So took a step back, and, pursued some other hobbies or business interests. And, I didn't really trade for much of the end of 2021 or really most of 2022. And then I really started doing it again in 2023. And that's kind of when I started, expanding the playbook, I guess is the way to say it, where, before that, 100% of my money was made on the long side. And then I was like, all right, 2022 was clearly a rough year. It was just slower year, I think is probably the way to say it. Good traders still made money. And that was kind of what I started telling myself too. Like, again, seeing the people around me, whether it was Jack or I'm pretty good friends with Kyle as well. Like, it was a slow year. Everyone's complaining about it, but yet they still made money. So I'm like, okay, like, no, this is actually like something that if you're a good trader, you put in that time and effort, it doesn't really matter what the market's doing. You're going to find those opportunities. They're still going to come up. And that also gave me a lot of confidence to be like, okay, yeah, like go all in this. You don't have to, I got a little shiny ball syndrome in me. I think probably everyone does, but like you see an opportunity, you want to chase it over here, chase it over there. And the truth is, like if you're doing that, your attention's divided and split and you're not going to be as successful at that, like one thing you actually want. So what do you want? And I was like, I want to figure this trading thing out. So that's when I really started getting back into it.
Yes, it's amazing. And I mean, I've absolutely loved challenging you. And just to finish off, this question actually puts people on the spot, which I quite like. So the very last question, one thing you wish you knew when you were starting out, well, obviously that you know now.
Okay. One thing I wish I knew. Man, I want to get.
I tell you, it's like one of those questions where you're like, honestly, I've asked it and I don't know what the answer is myself. I always think like the thing I always think, and this is like a really like this is a cop out, but I always think, just for me anyway, I would always say, like when people say, "Oh, what would you tell an 18-year-old version of yourself?" I would always just trust yourself. Everything's gonna be fine. Just trust yourself.
Honestly, it's a great answer.
Trust yourself.
It is a great answer. That would be a good one. But I think I'll go a different way. The quote that's been in my head a lot lately, I'm gonna give Kyle credit. I don't know who actually said it, but you'd rather wish you were in a trade than wish you weren't, right?
Yeah.
And usually what that means is obviously like you missed a trade versus you're in a position that is like really bad and you're, you know, looking at a really big loss too. So, and just to elaborate on that, like if you're not sure or you're a little nervous, like it's trading, like you can always get back in, right? So like it's okay. You don't have to, you know, you don't have to add to a position or add to a loser. Just like stop out, whether break even, small win, small loss, take a step back and reevaluate. Because even if you miss that trade, again, there's just going to be another trade, whether it's the next day or next week. Learn from it.
Yeah, and I think that, I mean, sorry to add to that as well. I think like going back to your, like you describing, you know, my goal, I want, you know, I know it's going to be, I think if it's slow, I'm going to be here in 5 years, I'm going to make it work. And I think like Lance talks about this a lot. Like if you miss an opportunity or whatever it is, that's fine. But you got to make sure that like you go into like in really in-depth detail and like don't miss it the second time. Like, what about this trade means that I have to trade it, write it up, and then next time again, like it probably just comes back to having that little bit of confidence. You've done the work and you're more comfortable with the risk.
Yeah. Well, and my biggest losses too, like usually it's not the first trade, it's like the second trade. Yeah, because like I'll get emotional, there'll be revenge trading, there's FOMO because I missed it. And it's usually not the first loss that's bad for me personally. It's that second one because it's emotional decision that I just totally, you know, make a mistake.
Yeah, no, I mean, that's such a great way to end it. And I've absolutely loved it. Thank you so much. I'm sure. And I mean, just to get the opportunity to see you flick through some charts. I always love as well. Always love when you get like, the really good traders, the way they flick through their charts so effortlessly. I love that in itself. I did say I wouldn't ask any more questions, but just for any of our viewers, I'm sure they all know who you are. Just in case they don't, where can they find you? And
best place would just be probably X, Twitter. My username is Mono, MONO _trader. I haven't posted much on there, but I am definitely a lurker. I follow a lot of people. I'm on Twitter every day.
Cool. So you can probably reach out to him and you might get a reply. Again, just thank you so much. It's been an absolute pleasure. I hope you're talking about meetups. I hope one day we do. I hope one day we're at a Traders for a Cause event or whatever it is, and we get to meet up. But again, from all of us, from myself, thank you so much, Matt. It's been a blast.
Yeah, absolutely. Again, thank you for having me on, and appreciate the time.
Peace. Cool. Peace, everyone. Thank you so much. See you all soon. Thank you for tuning in to this latest episode of Trading Takes. Don't forget to hit the like and the subscribe button. And if you enjoyed this conversation, please check out some of others with some great traders. Thank you for watching.